Yeah, equity holders are not having fun right now. That's all I can tell you. Any shareholders, equity holders, bagged.
And of course, if I say this in chat, nobody's gonna fucking believe me until it starts happening, and they're like,
What's happening?
It's
Wait,
okay.
didn't he tell us this? Didn't he tell us this?
Oh man, oh man, it's so bad. It's so fucking bad. Like I was shitting bricks just now. Okay, all right.
Terrible.
What are
All
we
right.
doing? What you going over? What's
We're
the
going over the
agenda?
psychological side today.
What?
Talking about avoiding analysis paralysis. We're gonna talk about some risk to reward, time effectiveness, as well as non-effectiveness, and how we can use these to our advantage, or how you can use them to tweak them to your comfortability when trading. So the first thing we're gonna talk about, we're just gonna do a lot of talking. Probably the first half of this stream. Second half is gonna be more chart analysis, looking at the psychological or not, putting the psychological part into it. Um, as I was saying, so when we're getting started here, first thing I want to talk about is analysis paralysis, making it simple for you guys, understanding general direction of the market versus looking at candlesticks and trying to catch a bottom or a top, catch some type of sniper entry, so you can show a lot of profits or show a lot of um, percent, right? Your P&L looks good, everybody's happy, it's all good. But do they know how you're actually trading? Do they know how you're actually approaching the charts? And is that something that they could either replicate or something that you could possibly teach others based off of your knowledge so that they could use this to their advantage? This doesn't have to be something that you do, but just something that is logical and comfortable for you to be able to trade, right? I won't bag any literal triangle traders if they're trading triangles and hit consistent 5 to 1s every single day, right? If they're hitting 5 to 1s in and out every single day, it's working for them, right? I'm not gonna sit there and tell them, oh, you're wrong, I'm right, because I'm doing it this way. This is the way that I chose to approach the charts, chose to use my analysis to fit my style and fit what I wanted to get out of the market versus what I believed traders should trade like, or how this should be, or how price should move, right? Because knowing that the chart or price can move, I wouldn't say random, but I guess in a random direction, right? Knowing that you don't know everything basically will help you out so much in this market, and it will eliminate so much stress from your trades and when you're getting into trades, and what bias you have, right? Whether it's up or down, right? So the first thing we're going to talk about is analysis paralysis. How can we do this when we're approaching charts and when we're approaching trades, right? When we're doing some type of analysis. We're going to talk about top-down analysis. That's our first, I guess, technical perspective standpoint of approaching charts when going to do the work, right? When going to approach a trade. And then we have the psychological standpoint, right, which is the mental part of it, setting a structured plan, right, with steps, following that plan with those steps and sticking to that plan. And if that plan is invalidated, then you now have a different directional bias due to your recent plan, right? So basically, if that plan was invalidated, that's like you having a plan B, right? So you could fit this in your overall plan, your first plan. Um, so having a plan with structured steps, right? Also understanding in the market that a balance must be in place, right? What I mean by this is that the market is filled with money, right? Market is filled with traders, market is filled with liquidity. Um, people believing that the market is going to go one way and people believing that the market is going to go the other way that don't know. This is called the uninformed money, right? And then we have the informed money. The market makers, you call them whatever you want, institutions, big money, right? Whales, people who can manipulate price and are looking to purge these uninformed money out of their trade so that they can make more money, right? And with this style, it's going to be mimicking that type of viewpoint, that standpoint, that perspective, and how we can look at charts, analyzing charts to fit that, right? So knowing that it's okay not to know, and knowing that the market is going to hand us those clues, right? Those footprints, giving us the direction it wants us to move in, and us being able to use that to our advantage for profitability, right? Knowing this already eliminates so much stress from my trading style. When I first got into smart money concepts, and this is just me giving you guys my experience with it, right? I got into it and I was like, well, there's so much structure, right? All these terms, everything like this. How do I know what's happening? If it hits this, isn't it supposed to do this? I heard this dude say this, right? So much confusion when looking at it. So taking perspectives, like Timmy was talking about last stream when he came in, saying that he took what he learned from me and from Hood, right, in one-on-ones in different sessions, and kind of used them to fit his own style. And from that, he's been printing, right? And with this, knowing that you have to fit everything to your own style, because making trading work is only going to make it work if it can work for you, right? If it can work in your daily life, in your lifestyle, what you do, what you like to do, hobbies you like to do. Literally, this is why I love trading, right? I talk about this a lot because it teaches us so much about our life. When entering trades, how we approach things, right? Our thought process behind things. If we panic, if we don't panic, there's just so much that comes with trading that if we don't understand, right, coming into it, we get hit with it, and then all of a sudden we're like, well, I just lost 20K. I don't want to do this anymore. I'm done. Or we keep going, keep losing money, and don't know what's happening. Or we end up persisting, right? And this is what we want as traders. That's the final goal. So that was kind of my like standoff on just analysis paralysis, how we can simplify that. We'll talk about a technical standpoint in a second when we're going to approach this certain trade on XAU, as well as a certain US or Euro short that I had last night. I was posting it in chat. Um, but before we do all that, we're going to get into risk to reward, right? My thought process behind risk to reward, how I approach risk to reward, and what I believe it to be, as well as how I believe this can help you guys and how risk to reward is utilized in my style, right? So we give basic introductions of risk to reward, what it is, right? We know that it means what you're risking is what you can make. So let's put out a couple positions here. And then let's understand time effectiveness with this in a second. But first, we're just going to completely talk about risk to reward, right? So I first got into these concepts, right, when I was trading. I wasn't trading with a lot of money. And I got into these concepts because I wanted to make a lot of money, right? At first, I wanted to get into trading. Everyone wants to get into trading. We're all humans, right? We want to make a lot of money quick, and we don't want to lose. Nobody wants to lose. Everybody hates losing. You don't like to see that red, right? But we have to get used to that. We have to understand that we are going to lose, but that we can use those losses for our advantage in the future, right? But getting into this, I got into this because I wanted to make a lot of money quickly, right? But I also didn't want to lose a lot of money because I didn't have a lot of money in my portfolio. So I said, how can I figure out a style or a method that can help me understand market direction, help me get into trades, but at the same time, allow me to make a lot of money quickly, right? And risk not a lot of money, right? Risk that was still 1 to 5% of my portfolio that I had learned from Playbit, other people, right? YouTube, wherever it is that you're learning from or taking these ideas from, right? This is where I put it into play and I say, okay, I wanted to learn how to make a lot of money quickly and how to not lose a lot of money at the same time, right? So with this, comes that patience, right? Waiting for setups to form, waiting for the market to show you its hand from time frame to time frame, top down analysis, um, as well as our confirmations, right? So with the risk to reward part, right, I didn't want to get into trades that I was risking a lot of downside on, right, or upside depending on what bias I had. I wanted to get into trades that I was not risking a lot. So in this case, right, instead of a 2-to-1, I would be looking at lower stop losses instead of higher stop losses. So then I would be holding trades for a lot less time, right? Because one, I would get stopped out quicker, or two, I would be in profits a lot quicker based off of my previous analysis, right? So we're looking at the same exact trade here, right? But one gives me the chance to make 3-to-1 amount of my money, right? So if it's $1, I have a chance of making $3. I don't want to risk as much on this trade as I do on this trade. I'm going to have to use probably 1 to 5% of my portfolio on this trade versus this trade. I'm still risking 1% overall, or 1 to 5% of my portfolio overall on this trade, right? A loss. That's how I'm basing risk on this. Um, but I had the ability to now make a lot more because I'm able to use more margin in my trade. I'm still risking the same amount of loss, but I can use more margin in this trade, right? That's why, just a quick example is leverage and spot. It's the same exact thing, right? One's just borrowing money. Um, so getting off of risk to reward real quick, we're going to talk about time effectiveness and how that plays a part with it. So when I talk about time effectiveness and I talk about what it looks like, right? We will just draw these out real quick. So let's do time effectiveness. Over here. Actually, let's make this time effective and then we'll do the non-time effective trader. And the theory behind what I'm going to be drawing out real quick is your portfolio profit net loss. When you go check the chart, go see how your portfolio's been, right? A time effective trader's portfolio is going to look, right, something more like this. Small dips, maybe a losing week, right? And then that constant upside, right? That constant profit, small losses, big wins, right? The non-time effective trader is going to look something like this. If you get a win, back at break even, loss, struggling to get back to break even, back in profits, back in losses, back in break even, profits, losses, and then eventually, right, you end up probably losing your portfolio, right? The idea behind the time effective trader and the non-time effective trader, the non-time effective trader is the trader that is going to be not putting the work behind his analysis, right? Not setting a structured plan, not setting things in place and doing everything that he needs to do to be able to enter a trade based off of his style for the profitability that he wants to receive, right? The time effective trader is going to be entering trades, right? Focusing on those big wins, right? And small losses. So I could sit there, right? Lose 10 trades in a day and say, hey, well, I just lost a bunch of trades, right? My portfolio is half of what it was before. I did a bunch of bad trades, but then I get in another trade, my portfolio is back at break even because I did all of this analysis. I did all of the work. I took those losses and used them as knowledge for my next trades, right, in the future. And I decided I'm not going to quit that. I'm going to keep pursuing those big wins, small losses, right? And with that came that risk to reward, which is why I look at that high risk to reward as something that I want. I don't look at it as a flex, right? I don't want to sit there and say, oh, I got a 55-to-1, whatever, right? Yada, yada. I want to say, hey, I was able to place this much margin in this trade, right? And hold it for an hour and a half and make what someone over here was holding for a week or two, right? Maybe even 3 weeks, maybe even a month, um, within an hour or 2 hours. So now that we talked about that time effectiveness and non-time effectiveness trader and the big wins and the small losses, we talked about this in the first stream, but I'm going to come back and reiterate this now, right? A basic understanding of this, just using the chart that we already see now, we already see what has played out, right? In this scenario, just right here, even if you were quote unquote institutional smart money, whatever you want to call it, um, analysis type of trader, right? Price comes back into this zone, you identify this zone, this impulse move to the upside, this reaccumulation right here, you see this institutional candle or even this demand zone, right? And you want to take buys off of this zone. The non-time effective trader, right, would take buys off of this zone. And even if he did all this analysis, right, to the 15-minute at this point, target the week high from this break of structure, ends up getting a 5-to-1 in roughly, I would say this is an hour. Yeah, roughly an hour and a half, right? 5-to-1, not a bad trade at all, right? I'm not going to tell you this is a wrong trade. I'm not going to tell you this is a bad trade. It worked. It did everything you did, right? Maybe you had the plan from price coming back into this low, respecting this demand, respecting this institutional candle, and continuing to the upside, right? Targeting that weak high. You ended up getting your trade in and out. Done, right? Beautiful trade. I'm not going to tell you this is a bad trade. You profited. Great job, right? But the non-time effectiveness trader probably saw this impulsive move to the upside, right? If I go into replay mode right here, probably saw this impulsive move to the upside and immediately set limits on this zone, right? And said, okay, when price comes into this zone, I'm going to be tapped into my trade, targeting this weak high, impulsive move to the upside, break a structure from a high that caused a new low, right? Not a bad trade at all. You still did all of this analysis, right? This is a really good analysis. You have a structured plan set, but price ends up coming into your zone. You almost end up getting stopped out, right? You probably get scared or something happens like that. Maybe you close, maybe you don't close, hold to your stop loss. Price doesn't tap your stop loss, pops back up, takes your weak high. You're like, great trade, you made some money. Great job. Now, the 5-to-1 was made, right? So now the the time effective trader now, and this is just going from now a 15-minute to a 5-minute, right? Now that we have received that large impulsive move to the upside, I'm looking for now that same thing, right? That same impulsive move to the upside on lower time frames. This is what we receive right here, this high that caused a new low. Right, impulsive candle to the upside right here, demand zone right here. I now have a 5-minute demand zone, right? So I can look to refine this. Let's get rid of this. And let's take this to here. Demand zone we had right there, right? Go on even lower time frame, see if there's that same exact thing. Institutional candle, sell side liquidity right here. Could have possibly taken buys right here, but I usually just like to take it at the top of the zone. Stops underneath the zone, targeting the same exact thing. Now you might say, okay, this is a 3-to-1, but now that I'm on a lower time frame chart, right, this is where this can come in handy. So wait for a price to tap into our zone. Let's go back. Now this is the 5 minute or the 1 minute. We can wait for the 1 minute to break structure upside, target something like that, or we can just stay in this trade. So once price enters our zone, right, we notice this same exact thing. We see that impulsive move to the upside off of our zone, right? Break of structure to the upside, that continuation, right? So we could have targeted that IC or we could have kept it on the same exact thing. This is probably actually a very bad example to show you this risk to reward as far as this goes. But in this scenario, right, you can see how going on the lower time frames, refining that if you were to choose that lower zone would have gotten you a much higher risk to reward, and you could have made a lot more money in the same amount of time or a lot less time, right, following this. Break a structure to the upside here. So you have alerts here, right? This is where I would set alerts once this low is created. Once this structure price is broken upside, you can either set alerts right either on this zone or we can look for entries. But once you are in this trade, let's wait for this to play out. You're out of it in 13 minutes, right? Whether you're at the top zone or at the bottom zone versus staying in this trade for an hour and 30 minutes. Both of them are still very low time frame trades, right? You might still see that as, oh, okay, it's not a long time. I can hold that for an hour and 30 minutes, right? But put this on a different perspective, because what I'm talking about is a fractal market, right? You could be entering on a 4-hour chart. That risk reward is going to be a lot higher. You're going to be holding for a lot more days than you would be entering on a 1 minute chart or entering on a 2 minute chart, right? Or entering on a 5 minute chart or a 15-minute chart versus the 4-hour chart. Because we will see the same things happen over and over, right? But we can use our higher time frame knowledge and then our lower time frame structure to confirm our higher time frame bias and knowledge as well with that. So this XAU long was right here, right? We can go over this again in a second, but we're first going to start off with this Euro USD short. So let me go ahead and get out of replay mode real quick. We'll go to Euro. And then we will start with this short. Then we will go back to gold and I will show you where the actual long was taking place. Now that would be an actual better example of what I had shown you before. So let's go back right to here. Okay, so at this point in time, I believe I had taken longs off of this zone, targeted this weak high, ended up getting out of my trade, right? Stopped at break even when price came back down into this zone. But I am on the hourly chart. Let's bring the speed way, way back. Bring this back to here. I notice now this displacement candle, right? This break of structure to the downside from this low that caused a new high. If we go on lower time frames, we can see that distribution, right? That manipulation of highs, creation of long liquidity, right? Those equal lows right here before that redistribution on lower time frames that ended up playing out, right? Accumulation of distribution. If we go to even lower time frames, we'll see the same thing. Right, that accumulation to distribution. So what I just showed you right here, the 5 minute, this distribution that we see right here is the same exact thing that I just showed you within this small area right now on the 1 minute on the 30-second time frame, right? So at this point in time, we get that hourly break of structure to the downside. I'm looking for zones to identify, right? I usually identify, right, that consolidation before the breakdown, right, that candle before that candle, displacement candle that broke structure to the downside. I have this entire area, right, marked out as a supply zone at this point. And one, I can possibly look to take buys if we raid liquidity down here, right? Let me take out this line. Put this one right here. One, if we raid liquidity right to the downside, break structure to the upside, I could look for some possible buys into sells, right? Remember, our higher time frames still have this push, right? This push that broke external points, right? Highs that created new lows on the higher time frame. So if we look on right daily chart, we can see that impulsive move to the upside. So we're looking at major discount of this impulsive move, right? With demand creation over in these areas. So we could possibly see this entire structure move as a weak high, right? Higher lows formed and then continuation up into the zone. Or this could be a liquidity raid right to the upside, mitigation of supply from the higher time frame, breaker structure to the downside from this range, right? This move right here. This could be a liquidity raid, mitigation, and then continuation to the downside. We'll need to use our lower time frames to confirm that now, right? So we went from the 4-hour to now the 1-hour. If we look on the 4-hour, we can see how we got that liquidity raid right to the upside, followed by that bearish engulfing candle right after. Back to the hourly chart, price taps into demand, right? We see price right now bounce completely off of that zone right away, introduce some demand, and break some structure points to the upside, possibly if we create a higher low, right, and continue to the upside. So what I want to look for here, right, is that creation of short liquidity. So I want to see clean highs, clean lows, right, creation of short liquidity, liquidation of longs followed by an impulsive move to the upside for continuation. Or if I see manipulation of highs, right, followed by that impulsive breakage structure to the downside, then I can look to possibly take trades to the downside. So right now I'm looking for that 15-minute structure break to the downside, right? We got that hourly. I need that 15-minute at this point. So we're letting structure play out. I haven't taken any trades at this time, right? Actually, no, let's go back. So I'm letting structure play out at this time, right? I'm looking for lows that cause new highs, right? This is the 15-minute. I get that break of structure to the downside on the 15-minute. Let me get rid of these. Same exact displacement candle, right, that we had seen before. So let's not utilize this low. Utilize this low right here. Displacement candle, area of supply, right, imbalances. So if it comes up into this zone and either breaks structure to the downside or comes up, mitigates this, break structure to the downside, I can look to possibly take some sells. What am I targeting? I'm targeting these lower time frame zones of demand. I think this was a 1-minute accumulation that I had marked up. This is the demand zone I'm looking at. Right, that caused this impulsive move up into this range. So I can look to possibly play some shorts into longs. I get that 15-minute structure break to the downside. So now I'm looking for the 5-minute, right, to now come into harmony with that. So we're looking for a 5-minute pullback followed by a 5-minute break of structure to the downside. There's a zone of redistribution here. So I've identified this as supply. Now wait for price to come into that zone and or break a low that caused a new high. Price comes into our zone, right? We're looking for now that 5-minute structure break to the downside. We end up getting, right? That zone that comes in, we see this low right here. We see a displacement candle put in. We can look on lower time frames for possible redistribution in this area, right? For that continuation to the downside, I still need to see more displacement to the downside. Why? Because there's an impulsive move right here, right, to the upside. So price could possibly come back down here, right, create some lows, liquidate those lows, introduce or tap into this demand, introduce demand on lower time frames, right, continue higher into the range, take out this liquidity up here, right, mitigate zones of supply higher into this range. So you have all this analysis going on with your head, but you also have this plan at the same time. So knowing that it could move to the upside, we need to see that displacement, right, breaker structures right here, that volume, right. I'll show you this in a second. So let me go back. Right, so at this point in time, I see that impulsive volume to the upside, right? I'm still looking for that volume to be shown on lower time frames. If I'm looking on even lower time frames, I can start to see that we're starting to increase volume, right, as we're breaking structure to the downside, but not enough is shown to me yet. Why? Because this could be distribution to accumulation, right? And then we see that reaccumulation, higher prices into the zone like we were talking about. So now we start to see, right, those breaks of structures to the downside. Not so much displacement yet, right? Nothing too much is shown to me because price could mitigate this zone, right? It's starting to create some possible liquidity right here. We could come up respect supply possibly in these areas. I'm just still watching price at this point in time. Because why? We see that same exact thing here, but then what do we get? We get that break of structure to the downside, that displacement candle after liquidity rate to the upside, right? So if I mark this out, I can now look at this as that zone of possible supply to take shorts off of if we can mitigate this now. So I see this entire impulsive move, right? I'm like, okay, we could possibly redistribute here, or we could be mitigating that demand here, impulse to the upside like we were talking about earlier. But I see this impulse move to the upside, so I'm like, okay, on lower time frames, we've definitely introduced some possible supply. I can look to possibly take trades off of this, right? Waiting. Price ends up coming into our zone. No, it does not. Break structure to the downside right here, right? I'm seeing this as even possible lower time frame redistribution, right? If we're going on the 15 seconds, we can see that accumulation to that distribution, right? We're looking at market movements. We're not looking at the candles, right? In these scenarios, that's how we're able to look at some of these spotty charts and understand direction, because we're looking at, okay, lows could possibly be manipulated here, but we see some accumulation, right, to distribution. Highs are manipulated. We're creating, right, those equal lows. Let's go back to the 1 minute. I see again, right, displacement to the downside. I'm looking at possible institutional candles here to take trades, but at the same time, I see that liquidity here. Price ends up taking out, right, both of those zones, right? So we ended up not taking any trades off of those, which is perfectly fine because we had that first plan in mind, right, from respecting this demand that caused this new high into that range. So let's get rid of these real quick. And then what do we see following, right? that displacement again to the downside. So we're sitting there saying, oh, price might have taken out our structure point, and actually, if I draw this entire candle out, yes, it did ended up rating that liquidity to the upside. So if we go on lower time frames here, right, we can see what we were talking about, that accumulation, and then ended up distributing, right? Redistribution. So now I'm looking at this as a liquidity rate to the upside, distribution, followed by accumulation to distribution, redistribution. I notice this as a supply area, and I want to take now trades off of this zone. So now I got that 1 minute break of structure, right? Displacement. Sorry, I actually entered off of this distribution. Right here. So we came into my zone, right? I noticed we had highs here. Price created equal highs. We ended up creating lows right here. Rated those highs right here on lower time frames, right? I'm on a 15-second chart right now, but you can use this for every single time frame. You can apply this to every single time frame because you will see it on every single time frame, right? So I'm waiting for that displacement to the downside, right? Something that shows me I want to get in this. I get that displacement to the downside. Possibly take some trades off of this zone. Putting it over this high, right? Stops over this high. So I'm looking at this zone as that consolidation right before that breakdown, that displacement candle. So you could take trades off of this. Targeting now. One, the week low that was put in, right? On higher time frames because you were playing on that hourly chart. You got that hourly breaker structure to the downside. So that confirms your 4-hour pullback now. So we can look for a possible 4-hour demand zone to target as well. But I want to target now that 1-hour week low. So I'm targeting that as my take profit one. The next low that I'm going to be targeting is liquidity right here, followed by that imbalance. So I had this zone marked. Okay, and then it was this impulsive. Yes, this original accumulation right here, this zone right here. But I ended up taking it to the top of the demand zone. Right here. So trade ends up looking like this. We're waiting now to get tapped into our trade. Trade taps us in. We get now that following break to the downside. If I'm looking on the 5-second, literally I see the same thing. Look at the behavior here. Accumulation, distribution, right? So I know this area as a zone of supply. If price comes back into this area now, so let's say I've already been entered here, or I didn't get that entry here on this first move right here, I can look to possibly take trades within this imbalance in this zone right here. So it'd be the same exact thing, right? But I'm now using this lower time frame. Lower high is my stop loss. Same exact scenario. Let's let it play out. Price comes into our imbalance. And then from that, right, we get that final continuation to the downside. So we could have used this lower high, got that 0.1% stop loss instead of this. We got 1.1 pip versus 1.5 pips. However you wanted to manage that trade, right? However you wanted to get that confirmed entry, if it was to the 15 to the 5 or just utilizing the 1 minute, right? We will now look for those zones. So let me draw out my take profits for you guys real quick. And now I targeted these take profits, remember, because on a 4-hour, sorry, any hourly time frame, we got that hourly breaker structure to the downside, right? So that's going to confirm my now 4-hour pullback. So I got this impulsive move to the upside right here. Large impulsive move to the upside, demand creation. So I'm saying, okay, definitely looking for bias, right? If we come back into this zone from that large impulsive move to the upside previously, remember our higher time frame bias. But I'm going to be targeting those lows. Go back on the 15. Let's take this off real quick. What is that? What chart is that? Hold on.
Something not good. USDJPY. The US dollar is getting stronger. That
Oh
means we're gonna
no.
gap down at open. But I didn't say anything.
I didn't hear what you said. What happened?
But I didn't say anything exactly.
What
I just
happened?
put my chart there. We'll figure it out in the morning if S&P gaps down. Oh baby.
Right, so
All
on
right,
the
keep
five
going
minute
because I'm
right,
absorbing knowledge.
no, you're good. 5 minute right, you could have chosen this candle right here. I chose lower in the zone, or you could have chosen this candle. It's completely fine, completely up to you how you want to take in this trade. We'll just choose this one right here for that more conservative take profit, right? For something that would, I guess you could say, makes more sense, right? Something that we would want for more possible profitability. Let's go on the 5 minute and let this play out if it will load. And then from that, price respects first, take profit, second, take profit, taps into our demand zone, right, that we had marked, ends up breaking structure upside. And then what do we see following? Remember that higher supply that we had and that liquidity that we had, right? Breaker structures to the upside. So now that we were utilizing an hourly time frame, right, playing the 4-hour pullback, even though technically we got that breaker structure to the upside and technically this is counter trend, we still got all those confirmations. We saw all the supply introduction from the higher time frames to the lower time frames, right, to be able to take this trade. And then when we came to that point, we were in our trade. We saw less than a minute, if so, right? Maybe even a minute of red, if anything, break even, and then completely to our take profits. We see one respects our take profit, right, from that first liquidity raid. Second liquidity raid respects our take profit, continues to the downside, respects our demand zone that we had drawn, right, and then continues to the upside from that higher time frame move that we had in mind, right? So this is still a very, very profitable trade, right? We still got to manage risk and got exactly what we wanted out of it, even though it was counter trend, even though we saw this higher time frame large move, right? But we utilized all of this lower time frame confirmation to get to that point. So all I'm looking at this trade, right, at this point in time, to simplify this as much as possible, is my 4-hour trend. And then my 1-hour trend, right? Within that higher time frame trend, right? That bearish move that we saw to the downside. We're literally just playing this 1-hour trend to the downside, right? This move to the downside, even though we are looking at a bullish chart, right? We still got a profitable trade. We still got everything we needed to get out of it. And we got it in a minimal amount of time, right? This trade ended up lasting 2 hours even, right? We're agreeing literally automatically. That's what we want as a time effective trader from waiting for all those confirmations, right? And I'm able to receive a 50 to 1 on a 55 pip move, right? versus trying to receive a 50 to 1 on here. Let's do it with the long position to make it easier, right? Instead of trying to catch a 50 to 1 on this demand zone, right, with a literal 50 pip stop loss, right? Because now I have to hold like, yep, let's just do 49 to round it up. Right now I have to hold for about 2,000 pips, 2,500 pips, right, versus 55 pips. I'm okay with holding for that long, making that much money and getting out of my trade, risking as much as I was able to risk with that trade, versus having to do the same exact thing with something that is unfeasible at this time, right? I can't long this holding to 1.28, a 25.12 pip move, right? Logically knowing that it's going to get there, or logically knowing that that is a possibility based off of previous confirmations, right? I don't know that at all. I need all following confirmation. I'm needing breaker structures here. I'm needing breaker structures here. I'm needing breaker structures here. I'm needing breaker structures here, right? From all this distribution, all this supply creation to even get up to possibly those areas. To receive the same amount of profitability that I wanted to receive in that same exact trade right there. So that is our Euro trade, right? We saw how we were able to protect ourselves. Fortunately, I was not up for the long. Right, but we can see how we're literally just playing a 4-hour trend, but we're just playing a 1-hour pullback. And then if we waited for now that hourly, let's get rid of all of this. Right, that hourly break to the upside, we see now this impulsive move to the upside. I'm looking for now zones of demand in these areas to take into higher parts of the range and possibly this higher time frame week high, this liquidity here, right? Unmitigated supply zones up here from this entire impulsive move. So let's get off of replay mode. That was Euro. We'll talk about gold real quick, and then we will talk about the market. Let's go ahead and get rid of all of this real quick. All right, so in MPix, I had posted an analysis with 3 scenarios, what I believed was going to happen when we saw this impulsive move to the upside. Get rid of all of this. Back to the hourly chart. And then we had our demand zones drawn, right? Our institutional candles drawn in our areas that we were looking to possibly bid. 1822. All right, so let's let this play out a little bit, right? We saw that hourly impulse to the upside, this large candle right here. If we go on lower time frames, we'll see that volume impulse, right, on that breaker structure to the upside. So this is a area of zone, or sorry, a area that I am possibly looking to bid, right? A zone of demand that I'm looking to bid. If we can reach that zone, break structure on lower time frames, right, and come to that time. So this point in time, I'm going to be looking for a 15-minute right break of structure to the upside after mitigating our zone of demand. Let's draw this out as demand for you guys. Then we as well had our lower zone of demand from this liquidity that was created here. So price now came into this area, right? Respected this zone of demand down here as well, this institutional candle down here as well. Let's go on the lower time frames, go back for you guys real quick. Still watching price at this time. Don't know why it did that on replay mode whatsoever. Okay, we're just gonna have to do this on the 5-minute. Let's replay this to here. Alright, so we had this zone chart out. We could look at this institutional candle as well. This entire institutional candle here. Alright, is a possible zone to look to bid. This is a huge candle, so I'm gonna refine it. If I go on lower time frames. From the 5 to the 1. Institutional candle here. I see consolidation in this area as well if I'm on even lower time frames. I'm not going to bid this zone, but you can see that demand zone, right? That high that caused a new low right here. Break structure to the upside. Demand was created within this area. So let's go back to the higher time frames. Okay, at this point in time, you might be like, well, why haven't you gotten in any buys, right? You could have gotten in buys at this point because you saw that break of structure to the upside right here, right? Liquidity rate to the downside, possible mitigation of this reaccumulation right here that brought higher prices, right? That brought this, again, break of structure to the upside. And ended up getting in a lower time frame trade right here, targeting a weak high right here, and possibly right here and here, which is not a bad trade at all. That is a valid trade. What ends up happening? Price ends up distributing, right? We're still looking for that higher time frame demand, that zone. Before we look for any buys, we need to see an impulsive move to the upside again. So I got a liquidity rate to the downside, right, of all of these lows right here that I had mentioned right here. We had the demand zone that we had drawn. We had this institutional candle. We had this lower time frame, or sorry, this higher time frame demand zone. And actually, this is the zone that I was wanting to bid if we could possibly come down, take out these lows, mitigate something down here, right? It was basing it on structure once we got to that area. So now price comes down, right? Mitigates our zone. I'm looking at this area. I'm seeing impulsive moves to the upside, right? Looking at this high that caused a new low. I get now that impulsive move to the upside. Now you might be looking at areas to buy, right? Down here. Possible zones of demand. But the issue, right, and something that happens a lot with this can happen with every chart and with every trader, right? Is we could identify these zones, get comfortable with identifying the lowest institutional candle or something like that. Try to get the lowest trade, try to catch the absolute top, try to catch the absolute bottom, or however we look to refine our trades, right? And end up losing trades because price ends up introducing new demand or new supply and continuing to the upside or continuing to the downside. So we'll see following breaks of structures, right, to the upside or to the downside. And you'll see your zones left behind, and you'll be like, well, what happened to my trade? My limits didn't hit, and then maybe your limits come back down, and then taps into it, and then breaks structure to the downside because it already broke to the downside following an impulsive move, right? And you're like, well, I'm taking out of my trade. All of my analysis was wrong. I don't know what I'm doing, yada yada. And you get into that analysis paralysis, and all of a sudden, you don't know how to trade, right? So we identify this zone of demand. I can look to possibly take longs off this zone if we come into this zone, right? Mitigate this zone, break structure to the upside. We also have this imbalance, right? So we can be looking on the lower time frames at this point from this perspective. Price isn't super clean to me at this point, right? I'm not taking any trades at this time. Why I'm seeing all these lows, I'm looking at this zone, right? If price ends up breaking structure more to the upside. and I can look to possibly bid new zones, but we still have, right, our zone in mind. Right, so we see now this reaccumulation here, right, this entire demand zone that was created. And as I'm watching price at this time, I see that these highs are being created right here. These lows were created right here. We got a liquidity rate to the downside, followed by, right, that mitigation of this consolidation here. If I go on lower time frames, you will see that reaccumulation, right? I don't want to go to the 5 second or the 1 second to show you that. Actually, let's just go look at it real quick. Right, distribution to accumulation, that reaccumulation, right? Creation of demand. So if we come into this zone break structure to the upside, I can look to possibly take trades. Price comes into this zone, raid liquidity to the downside, right? We see that impulsive move now to the upside. Now I'm looking at this candle as my demand zone to now take entries off of.
Most important quarter of their careers, trying to force a game 7 and keep their championship dream alive. Down by 10. Again, they were in this situation in game 1. They were down 12 in the fourth quarter in San Francisco. Get back and won.
Stops underneath the demand candle, or you can put the stops underneath the entire low, right, of this zone. Then we had that supply, right, from the higher time frames, from that range. We saw this break of structure to the upside, following break of structure to the upside, demand mitigation, right? Another break of structure to the upside, all the way to the lower time frames. And we see now that short liquidity as well being built. So that's how I'm using, right, trend lines in a sense, right? I'm not using them as break over, retest, and then move, right? Because a lot of the times you will see those trend lines right, break down and then continue, because all it is a liquidity rate, introduction of demand, continuation to the upside. Retail is looking at this, right? They're buying once it hits this zone, or they're shorting once it comes back into this zone. Looking at this trend line, right? Whatever they're looking at, in this sense, creating these equal lows, creating this liquidity within the market, we are creating short liquidity at the same time, right, as purging longs, but creating demand, breaking structure to the upside. So there's a lot of shorts getting into trades saying, hey, this is going to continue to the downside from this impulsive move to the downside, right? They're looking to catch a lower high right here, literally from just this structure point like this. And they're saying, hey, I'm going to get in trades here. I'm getting in trades here from either this move right here or maybe this move right here. So they're looking to get in trades right here. And we're looking to long when maybe they're looking to short, right? If they're on lower time frames looking at the 15-minute, they see this as a displacement candle to the downside, and they're looking to short this. They have this trend line drawn, right? Whatever. However you're trading it, you can see that equal highs and equal lows. That's showing you where that liquidity is, right? We see that liquidity rates downside, demand mitigation, demand introduction, and then we get that continuation to the upside. So now the first thing I targeted, one, you could target a lower time frame weak high, depending on however you wanted to take your profit. One right here, right? I'm going to be targeting my first take profit as the higher time frame weak high, and then I want to be targeting higher into the range as well. Into this supply. Why am I targeting this supply, right? Let's go on the higher time frames. Right, you see this impulsive move to the downside right here. So we have a possible break of structure right here, right? We could create a lower high right here, or we could continue higher into the range from now. This impulsive move, right, to the upside. I identify my drop base drop, I see a drop base drop right here, right? So I see this as a zone of supply, a zone of redistribution, right? Let's go to lower time frames. You guys will see that same exact thing I'm talking about, right? That accumulation to then that distribution, and that displacement candle creation right here, right? Introduction of supply. Right, you can see exactly what I'm talking about. Accumulation, distribution, introduction of supply, right? Liquidity rate to the upside. So I'm looking at these areas as take profits. This entire zone. Right, take profit one either here. I had it here, and then I had my second here, and then I had a third higher into the range into this supply. Why did I target that supply there? Because I'm looking at this redistribution, right? One, this would be in premium, right, of my higher time frame supply that I had drawn, and two, I had seen this displacement right here, seen this as an imbalance, right? Seen this as a higher possible zone that I could take profits off of, as well as, right, all of this liquidity right here from these highs. Let me draw it on this high right here. Remember, they have to be they don't have to be exact. They don't have to be literal equal. They just need to be relative. We need to show, right? Know that there is liquidity here from people getting into shorts, placing their stops over these highs. Maybe they got in here on a breakout, place their stops over this high, right? There's I know that there's liquidity within this zone as well as that unmitigated supply zone. So that's where I would like to target, right? So now we are in our trade. Let's put out our take profit lines. Let me get rid of these.
Steph Curry. Three gets inside. Game's open, but gets it top.
We have our first take profit in place, right? Second at the supply zone right here. And then third's going to be higher into the range. We let price play out. First take profit is hit. We're looking for that supply zone higher into the range. Now we're watching as price is moving up, right? We're creating that liquidity. Price taps our second take profit. We're seeing that more, right? Creation of liquidity. As we're creating new highs, we're leaving that sell side liquidity, right? We're leaving the lows. People are getting comfortable in longs in these areas, right? From that, price comes higher into the zone, ends up not tapping into liquidity, mitigating lower time frame, right? Probably on mitigated zones of supply over here. We don't end up getting our take profit 3 yet, but why will I still hold for take profit 3? Because, well, on higher time frames, we've now received those breaks of structures, right? More breaks of structures to the upside, more demand creation when this within this area. But if we start to see, right, those impulsive moves to the downside, manipulation of highs within these areas, then we can look to possibly take sells. That's what I'm looking for gold next. Let's get off of this. Yes. Possibly come up into this zone right now. I'm not seeing any sort of higher time frame displacement yet, right? We got possibly a mitigation of this supply zone, break a structure downside here. We see this zone as a redistribution zone, but remember we have this entire impulsive move, so we could put in a higher low here and continue to the upside. So we could look at this zone as a zone of supply to possibly take sells into buys. higher into the range. And that's how you're going to start to formulate, right, your plans, and then you're going to use your lower time frames to confirm it when going to your areas, or if price doesn't follow your bias, right, price doesn't follow your line, whatever you're doing, then you can get a different bias and understand a different bias and get a new bias, right, a new directional bias. So now we're going to go ahead and look at ETH and Bitcoin, see what they're doing real quick. Probably not much, and I honestly probably I'm not going to be showing you any trades because I'm probably not going to be trading tomorrow with Powell going on and the volatility that's going to be available within the market. I want to let the dust settle. I want retail liquidated before I get into any trades myself. But let's go ahead and get into ETH real quick. Let's use this chart actually.
To 5% interest and earn up to $300 when you set up direct deposit. So fun, get your money right.
Let's put that back. Okay, so what I have drawn out for ETH right here, and what I've posted, right, is showing just the general I guess manipulation of this range, right? What this means by, or what I mean by this, right, is we see those trendline liquidities being built up both ways, but we see more lows being manipulated than we do highs, following by lower time frame breaks and structures to the upside, right? We're starting to see some type of demand creation, so I could say, okay, this is possibly some accumulation, right? But until we start to see breaks to the upside, right? Hard breaks to the upside, followed by volume, right? Break of structures, up the zones, right? We still see this impulsive move. Let me draw it out like this. If we respect this low, right, that brought this break of structure to the upside, and even this break of structure to the upside, and it's only going to be a break of structure, remember, if we create a higher low within this area. So if we can break structure points in these areas, you can look to possibly target those. But like I was saying before, right now I don't have any setups or anything like that I'm looking at for crypto or the market in general. I'm going to let the dust settle. But I do believe this range is more cumulative, as we have been leaving, right, equal highs along the range, a lot of equal highs, right? You can see all this supply being taken care of. What I mean by this is you don't see a lot of those displacement candles, or when you do see those displacement candles, right, you see that lower high following that supply mitigation, and then you start to see again those lethargic downside movements, right? Let's go to Bitcoin. Bitcoin's a little more interesting, actually. So like I was talking about with Scarbs in chat, remember how we wanted to see that displacement break of structure to the downside on those lower time frames? We never actually ended up getting that, right? And from that, price reaccumulated this low that caused this high right here. This break of structure to the upside, right? This is your reaccumulation zone right here. Respected that. Took out lows, right? Liquidating lows while the same exact thing we talked about, leaving highs, right? So this is that accumulation, that reaccumulation that you can see on lower time frames. You'll see distribution to accumulation. Let's delete this so I can show you what I mean. Right, price distributes, creates lows, leaves the highs, right, liquidates the lows, mitigates a zone of demand that was previously sponsoring a new high, right, that broke these areas of redistribution, right, the drop base drop, and then we continued higher into the range from that. But as far as market sentiment goes right now, start off from our higher time frames. So we do have a lot of lows that we are starting to create, right? We're seeing equal lows, right, in this zone, but we also have equal highs at the top of the range. Market structure is still bearish on the higher time frames. We still need to see, like I was saying, those impulsive moves to the upside, followed by volume with breaks of structures to possibly take some trades. But in this scenario, I would possibly be looking for one of two things. One, I see a liquidity raid right to the downside in this area, followed by an impulsive move to the upside. Accumulation, right? Reaccumulation and then continuation. That's where I'll look to take trades. Or two, if we break structure to the upside and then follow and continue to just go higher into premium of the range, I will be looking at more of a redistribution as we will be taking out previous shorts and then possibly continuing to the downside. So I know you might sit here and say, well, you're saying it's literally one or the other, but it is until the market can show us that, which also eliminates stress, right? Because I'm saying, hey, it could literally go one way or the other. I know which way to play following because I have my higher time frame plan, I have my higher time frame structure, I have my areas that I'm looking for. So whatever the market does, if it starts to follow my plan or if it invalidates my plan, then I can create a new one, right? So with that being said, I'm gonna give about 5-10 minutes. Is there anybody who had any questions about anything that I went over today that is in here right now? Speak now or forever hold your peace. All right. With that being said, I appreciate y'all showing up again tonight. Like before, this will be posted on YouTube, Telegram, everywhere where you guys will be able to access it within Playbit. I appreciate you guys popping out to the stream. Questions you can DM me, ask me on YouTube comments, anything like that. Thanks again, you guys, and everyone have a great night.